Just went on Wednesday, November 21st, 2018 from MarketChess.com. It is MarketChess.com. Save it. Bookmark it. Pass it along, doing this quick recap here as we head into Thanksgiving Eve. All markets, of course, will be closed tomorrow on Thursday, November 22nd in observance of Thanksgiving holiday. Friday will come back, as it's known in the retail world, Black Friday, retail bonanza, plenty of deals allegedly or supposedly online and in brick and mortar. Well, we do have Cyber Monday coming up the following Monday, but we'll come back for a half-day session on Friday, but the market will close at 1 p.m. Eastern. So half-day Friday, for all intents and purposes, the week is pretty much over for most traders. As we look at the S&P 500 next daily time frame, yes, we bounced today. And we talked about this concept throughout this correction. Here in these main videos here, and also in the full deeper videos inside Market Chess Subscription Services for members, that look, when you're in a corrective market, okay, the rallies are going to feel good because you get a sense of relief. It's a relief rally that we're not crashing and burning and the world isn't ending. But in reality, they don't necessarily serve to kind of definitively bottom the market, right? We need more evidence that we just string together rallies which hold, and then we can't see the bears kind of reassert themselves like we did earlier this month here into this rally, which ultimately failed. So, yes, we bounced today, but look, it's the most traveled day of the year, the day before Thanksgiving. We can't get our hopes up too much. It's true, we are so far in the S&P holding prior late October lows. The NASDAQ actually breached those lows, and I think the best bull case now would be that yesterday's gap down on Tuesday was some kind of cathartic washout moment, which serves as a reversal. But that's way too premature to say right now. Again, I'll talk with members over the weekend probably some more about this in terms of what we need to see to really ascertain whether we have in fact bottomed. Small caps had better hold that 146 level on the IWM ETF for the Russell 2000 index, in my view, to sustain any type of rally. I don't mean to be so dire, but the fact is that our defensive posture, I've been mostly in full cash throughout this correction. Our defensive posture has truly just saved us a lot of grief. You look at Netflix, and look, the FANG names are not likely to be the leaders if we do come out of this correction for a new bull run. It's just the way bull markets work. Leadership changes, which is why we're always on the lookout for fresh leaders. We have a good running list of names for that. It's still, in my view, too premature to kind of declare the exact group of new leaders, but we're still keeping an eye out for it. The VIX has been fairly subdued. All things considered, during this correction has not super spiked into the 30s or anything like that. So is the market complacent? Maybe. Again, there are a couple ways to read it. Our main focus is just on the price action, and right now the price action, I mean, look at retail. In front of Black Friday, yeah, it did bounce today, but boy, retail has just gotten clocked. I know Target did not help the cause yesterday. So there are some instances in speculation, all forms of speculation, where laying off the action is simply the best move. I know in hindsight, aggressively shorting this thing during a holiday week seems like the slam dunk easy trade, but I can assure you, I think over the course of your career, shorting a holiday week, a low volume holiday week, typically in the market is not really a high probability bet. Gold miners, real quick, are acting better now. Is it definitive proof of a bottom here as well, of a new bull run? You know, Barrick Gold, I think, is a pretty good chart. The answer is, though, most of these miners still have a lot of work to do, technically. You look at IM Gold, a lot of work to do here, I would say, to prove that these things are out of the woods. So we'll take it one at a time. Gold, silver. I still would prefer the dollar to get whacked, which really it hasn't yet, in order for precious miners and metals, I think, to start to flourish. So we're keeping a running list of names acting well inside the service, some natural gas related plays as well, which are holding up well, but we're not in a rush to try to force something to happen. And I think this correction in particular has been much more about patience, I would say, than anything else, because we're just kind of letting it play out, unfold. We want to keep things tight. Yeah, we can take little shots here and there, but we're doing so in a very careful manner. And hopefully, typically, I should say that patience should pay off. When we do firm up, if and when we do firm up, we could be in a position to easily pounce on it. So again, we'll be running through the full idea flow for members. If you like what you hear in my videos and see in my blog posts, I'd encourage you to sign up for a membership at a reasonable price. No better time to do it than over the holidays. Now, get yourself nice and situated into the service. You'll get full videos plus private Twitter feed with text, email alerts in real time, updated watch lists, and my presence for you virtually around the clock. We have a great group of people inside the service. Everyone's welcome, rookies, veterans, retail, institutional. You will become a more disciplined, focused trader. No noise, no ego, no nonsense. That's my promise to you. Thank you so much. Have a happy, healthy, and safe Thanksgiving.